Let's start with one honest truth before anything else. India is entering one of the most dangerous and exciting IPO phases in its market history. Dangerous because hype is extremely high. Exciting because real large system level companies are finally preparing to go public. Most retail investors think IPOs are about quick listing gains. Institutions think IPOs are about owning future market leaders at the right price. That difference in mindset decides who makes money and who doesn't. In 2026, the IPO pipeline is not small companies trying their luck. It's platforms that already run India's economy, payments, telecom, exchanges, consumption, logistics, health, and digital infrastructure. Today, I'll walk you through the most hyped and most important upcoming IPOs, explain why they matter, what stage they're in, what risks people are ignoring, and how you should think about them as an investor. I will deep dive only into the IPOs that actually matter. Others I will mention briefly because not every brand deserves your capital. Let's begin with the IPO that is already official. PhonePe. PhonePe has received SEBI approval for its IPO. That single sentence changes everything. For years, PhonePe was just another loss making fintech story. Today, it is positioning itself as India's core financial distribution platform. PhonePe is not just a UPI app, it is digital infrastructure. A massive percentage of India's UPI transactions pass through PhonePe every single day. This gives it something very few companies have: behavioral lock in. People don't wake up and decide to change payment apps. Merchants don't casually replace QR systems. This creates stickiness that translates into long term monetization power. Over the last 2 years, PhonePe has quietly done three very important things. First, it reduced cash burn. Second, it expanded revenue lines beyond payments, insurance distribution, mutual fund distribution, merchant analytics, and lending partnerships. Third, it reorganized its corporate structure to become fully India domiciled. This IPO is expected to raise around Rs 12,000 crore. But the real story is not the size. The real story is positioning. PhonePe wants to become the default financial gateway for India's middle class. If successful, this IPO could become the first fintech listing that institutions actually hold long term. Now let's talk about something much bigger: Reliance Jio. When people say Jio IPO, they often misunderstand what is listing. This is not just a telecom IPO, this is India's digital backbone going public. Jio connects more Indians to the internet than any other company. It powers mobile data, home broadband, enterprise networks, cloud services, and digital platforms. Private investors like Facebook and Google invested in Jio at valuations that already rival large listed companies. An IPO would unlock value not only for Reliance but for every index fund, pension fund, and global investor exposed to India. Valuation expectations range from $130 billion to $180 billion. That would make Jio one of the largest listed companies in India overnight. This IPO is not about short term gains. This is about ownership of digital infrastructure. When Geo lists, index weightages will change, capital flows will shift, and market dynamics will adjust. This is the kind of IPO that defines decades, not quarters. Now let's move to an IPO that directly impacts every investor watching this video: the National Stock Exchange, NSE. Yes, the exchange itself. NSE has been preparing for an IPO for years. Regulatory issues delayed it, but the business remains extraordinarily strong. Exchanges are among the most profitable businesses globally. They benefit from volume growth, financialization of savings, and capital market expansion, all long term structural trends in India. If NSE lists, it will likely be one of the highest quality institutional IPOs India has ever seen. High margins, strong cash flows, minimal competition. Now let's move into consumer and internet platforms. Flipkart has been preparing for an IPO slowly and strategically. Walmart has been restructuring ownership, simplifying operations, and aligning governance. All classic pre-IPO moves. Flipkart operates in a competitive market, but it also owns logistics infrastructure, category depth, and deep consumer data. An IPO would test how public markets value Indian e commerce compared to global peers. Flipkart's IPO will not be about profitability today, it will be about market dominance tomorrow. Now, let's talk about one of the fastest growing startups India has ever seen: Zepto. Quick commerce is controversial. Critics say margins are thin, supporters say habits are irreversible. Zepto represents that debate. The company has grown at extraordinary speed, raised capital at high valuations, and expanded aggressively. An IPO would attract massive attention and massive scrutiny.